You know what? I gotta tell you in your face that someone is out to get you, and I lost about 109,000 USD in one single day. There was actually this broker that I was in, and it actually rug pulled me.
Trading is gambling for 90% of the population. What's up, Callisto? Today we are here to have a candid discussion and a deep dive into the Forex myths in the trading industry, as well as the common mistakes that new traders make. Now, both Leonard and I combined have 14 years of experience in trading, and we have withdrawn over hundreds of thousands of dollars on a monthly basis. And we're here to make sure that you guys know everything that you need to know about the trading space. So let's get started with the first common misconception. So the first one that I do see here is the market is out to get you and wipe your account clean. Now, Leonard, what are your personal thoughts on that? And let's bounce off ideas from there.
Yep. So for me, I really do think the market is out there to get you, and you have to have that sort of mentality when it comes to trading. If not, you are going to get wiped. At the end of the day, you guys know that trading is a zero-sum game. Someone is actually out there to get you. If you lose, someone else won your money. If you won, you took that money from someone else. So for me, knowing that kind of mentality keeps you defensive when you trade and keeps you from busting your account. But that being said, don't go into trading with that victim mentality, thinking that, there is a hedge fund out there, or there's a specific man who's actually looking at your MT4, going to manipulate the markets to hit your stop loss. I think that's very dangerous in terms of thinking, and if you go down that rabbit hole, you're definitely going to end up losing more than you win.
Personally, for me, I feel, right, because I'm a smart money concept trader, there's this whole idea of, banks and institutions manipulating people's trades, stopping people out. That's why there's such a thing as stop loss hunting. Now, given that, regardless of how rich we are, right, we have multi-million dollars worth of accounts, and it doesn't really matter if you have hundreds of millions of dollars that you're trading with in capital. I am considered a retail trader. You, Leonard, you're also considered a retail trader. And my personal take is that we are all retail traders. And because of that, I don't think anyone is out to actually get you, right? Even the banks and the institutions, yes, they see stop loss levels, they will target it, but they don't do it knowingly or with the intentions of really stopping you out. They're just gathering liquidity to move the market, and that's what is needed to move.
Okay, but wouldn't you say that the fact that they do need to gather liquidity means that they do need to gather orders from these people, and at the end of the day, that means they are actually hunting and stopping you out? But I think we can converge on a point, right, in terms of thinking that it's not because the market is out to get you specifically, it's out to get a specific kind of trader. Correct? It's out to get all the retail traders that trade purely support resistance. You can spot these things using SMC concepts. So I think if you think the market is out there to get you, I think I want to reassure you that no one is out there looking at your MT4 thinking that they want to wipe you out. It's purely due to a lack of knowledge and you making all the mistakes at the end of the day that leads to you busting your account. And then if you have that sort of victim mentality where you think that someone is manipulating your trade, the broker is wrong, there's a hedge fund out there that specifically targets you, then you're never really going to be successful in this space, right? But there's a knowledge gap, essentially, which is what I'm trying to say.
Yeah, definitely. Yeah. I feel it's a knowledge gap as well, because I think the main reason, like you mentioned, why people are thinking that the market's going to get them, each time they take a trade, they take a stop loss. Each time they take another trade to get back their win or try to win back, they take another loss, and then you're like, man, this shit is not for me. The market's out to get me.
Yeah.
I know a lot of people feel that way, right? Now, this just because they think that making money in the Forex industry is extremely, extremely lucrative and very, very easy to do so.
Yes.
And they jump in thinking that they can just press one buy or one sell button and make the money. But the truth of the matter is that it requires a solid strategy as well as good psychology in order to make money in trading. And that's why I personally feel that it's really a mindset thing, right? Mindset plus experience that will help you make money in Forex. So on the topic of, the idea that the market is out to get you, do you think it is extremely hard to make money trading?
I mean, to me, that's a pretty loaded question. Hard is actually very, very subjective. Depends on what you define as hard, right? I would say if you tell a 12-year-old to go ahead and drive a car, they're going to say that it's tough, right? If you ask someone who is like you and me, who are experienced to drive a car, it's going to be relatively easy for us to go from point A to point B. So for me, hard is just subjective. There's just a knowledge gap between your start point and your end point. And that's why you guys think that's a bit complicated. But when it comes to, let's put it in the trading sense, there's only two real things you actually need to really go ahead and make money, right? Number one, you need a solid strategy. Number two, you need a lot of capital. And don't underestimate the amount of capital you need to actually go ahead and make money in this space. So number one, for getting a good enough strategy, you do need something that is consistent, you can control your risk, and through all different sort of market conditions, you can come out ahead of a win month on month on month, something consistent, right? So for us, we do have about 7 to 10% per month average. This is after years of experience and thousands of trades. So I do know my numbers very, very accurately. In terms of capital wise, if you go and really scale it down, most people think that they can get rich off $1,000. But it's not true. If we do 7 to 10% conservatively month on month, that's $70 to $100. Not really going to do much.
Yeah.
Correct? So you do need both of these things, and people underestimate how long it takes to actually get a profitable strategy, and then how long it takes to actually accumulate enough capital so that that is enough for you to go ahead and make a living doing this. Yeah. So
Yeah.
to me, hard is very subjective. It all comes down to what is your personal expectation when you're doing this as well. Most people go in thinking that, okay, I'm going to start with $1,000, I'm going to start with $10,000, I'm going to be a millionaire in 6 months. And that's completely not true.
It's not realistic at all.
Yeah, it's not realistic, right? Yeah, it took us 7 years to go here and get here.
7 entire years. And
Yeah.
many years of failing as well.
Yeah,
Yeah.
years of losing money, not earning at all, growing our capital, even when we were profitable with $10,000, $20,000, that was at most, $700, $1,400 per month. It really wasn't enough to survive, and we were living in Singapore, so that's really, really tough. Yeah. So I think hard really is down to it being subjective. If your goal was just to, okay, I want to have a $1,000 account, I do want to at least get a profitable strategy in 6 months to a year's time, and you can extend your time horizon of thinking like that, and you're okay with $70 to $100 for the first year of trading, then yeah, then I would say that making money is not hard. But if your expectation is making $1 mil, $2 mil, $3 mil in a span of 2 months and 3 months, then I would say, yeah, you're going to find it extremely hard.
Yeah, for sure. I do have one pointer to add on that, is that if you are looking to trade Forex to make money, right? Money could be side money to basically supplement everything that you're doing with your regular job, your 9 to 5 job, right? So things like if you want to pay your utility bills,
Mm.
if let's say utility bills is about $100 to $200 a month, we can use like a capital of $1,000 to $2,000
To pay some of that
to
off.
pay some of that
Yeah.
off, and that is already helping you offload some of that financial stress.
Yeah, but Nick, it really comes and boils down to the expectation of what you want to get when you start doing this.
Yes.
Yeah, that's why I'm so hard up on the subjective meaning of hard. What exactly is hard,
Yeah.
right? If you want to make 3, 5, 10% a month, like this is really, really doable as long as you follow a strategy. I think that's completely normal. Yeah.
Okay, so leading on to the next point, what is a realistic amount, or what's the realistic gain that you can actually gain from trading?
Mm.
How much can you actually make from trading, or what do you think people should have their expectations set on?
I can't speak for any other trader, right? We only know our statistics ourselves, right? You look at my journal,
Yeah.
you
look
yeah.
at my
I
journal as
look at
well.
your journal. I look at Bobby's trade history when it comes to stocks. I look at Thomas's journal as well, right? So all of us have a very good understanding of each other's win rate and profitability because me and you work so closely in terms of trading wise nowadays. I think very safely, I can tell you the statistics outright.
Yeah.
We have about let's put on the low end, 80% win rate.
Yep.
And our RR is about 0.7. Yeah. So if you average that out, let's say you take one trade a day. For every trading day is 20 days. Take 20 trades, you win 16 of them, you lose 4 of them. If you go here and do the math, that averages out to about 7.2%
7.2
per month. And I think that's very realistic in terms of what we've been doing for the past few years already. And then it's constantly been within the range of 5, 6, 7, 8, 9. So I would say if you guys do have a strategy like that, if you guys follow our strategy, then it's going to be somewhere in that range. So don't think you're going to be flipping accounts, doing 100%, 200% every single month. And you see all these YouTube videos right now of all these Forex gurus, they're all teaching you guys how to go ahead and trade, how I flipped my $300 account to 3,000 in 2 weeks. Clickbait titles like this. Yeah, it's entertaining, but it should just be viewed as that. The YouTube videos should just be purely seen as entertainment. It's not really going to teach you a profitable strategy, and in the long term, you're just going to end up losing and busting your account. And then you think Forex is unsustainable. And that's the reason why.
It definitely poisons their mind, right?
Yeah.
Like it really gives them the wrong image of what trading really is. Right? I think a way to compare it is you could compare it to the S&P 500, right? And the gains that it provides year on year. It roughly averages around, 7 to 9%,
10% per month. Per
yeah,
year?
per
Sorry,
year, right? And
Yeah.
assuming that even if you just follow the way we trade and you do 7.2%, maybe you don't take all the trades, you take half of it.
We do half, yeah. Let's say 3%.
3%.
3%.
And you multiply that by 12.
You do about 36% a year.
36%, which is 3 times more than, or
Yeah,
more than 3
S&P.
times
Mm-hmm.
of the S&P 500.
Yeah.
So it really depends on how much you want to achieve,
Yeah.
right? And then you scale it accordingly.
Yeah. I think everyone needs to scale that down. Assume they're going to make a very small percent. And then assume that you're going to need a way bigger capital than you currently have, right?
And that's the safest way.
That's the safest way. Everyone looks at us and looks at our withdrawals, right? We did 150K. No, sorry, about 190 grand. This one in May itself, right? Yeah, and everyone assumes that that's going to be a normal thing for everyone else that out here that's trading. But you have to understand we're trading with a huge amount of capital, and we did have a spectacular month. We actually won 21 trades in a row, actually. And that's why we were able to get this kind of draw. But it's not going to be like that every month. Some months can be way less. And people need to manage their expectations as such. Yeah, they think Forex is a get-rich-quick scheme. Because of that low barrier to entry, they think, oh, you know what? Since anyone's allowed to do it, that means anyone can be successful doing it. But that's really not the case. You know what I mean, right? Like, that's where the lack of financial knowledge really starts to seep in, and people make a lot of mistakes.
Regardless of how much money you have.
Correct.
Yeah.
Yeah.
So I guess like that brings on to the next question. How much money do you actually need to make money with Forex?
How much money do I need to make money Forex? So you're asking me about the amount of capital I need?
Capital, yes.
Yeah. Which really, once again, right, scales down to how much your strategy actually makes and how much capital you have on hand, right? Yeah. So going back to the reason why I quit university in the first place, I didn't quit until I had both of the secret sauces of basically trading. I need, number one, a profitable strategy. Number two, I need a lot of capital. So that's why I was working my ass off. Until I had those two things, I wouldn't quit. It was my backup plan. I would stay in university. I would try my best to go ahead and graduate. And then if all things fails, then I'll just get a job. But I needed to secure my future. I needed to know that if I had a shit ton of capital, I wouldn't lose it all in one day due to poor money management. And if I had a good strategy, I want to be able to use this strategy profitably and consistently over years so that I can constantly take withdrawals, not bust my account 1 month. Right?
Correct.
Yeah. So for me, myself, back when I quit, I was doing about 4 or 5% a month. Yeah.
Very conservative,
Very conservatively.
Actually, yes.
Yeah, very conservatively. It was after about 2-3 years of trading at this point in time. So I did have a strategy myself, conservative risk management. I think it was 0.5 to 0.7% per trade. And I was doing about 3%, 4%, 5% per month. And you guys already know I used to work 3 different jobs while I was in university. So I saved up about $100,000 then. And that's when I decided, okay, if I can consistently do this every single month, then I'm going to replace my job completely already. And that's when I quit because it's fully scalable for me. So most people tend to, number one, again, right, like overestimate how much they can make on their strategy and then underestimate how much capital they need in order to actually make the strategy work. Yes. So it's twofold. You need to constantly work on your strategy, then improve your capital. Work on your strategy, increase your capital. Work on strategy, increase your capital. Like you just have to keep doing this over months and months and years and years. And then you can start to think about making it a full-time thing. If not, then don't expect to give your 50%, effort into one thing and expect to surpass me.
Yeah. And you guys also need to know that the idea of a very good trading strategy would mean that it is back-tested and is able to withstand a certain number of losses inside it as well. So that means you need to have a trading data of at least 100, 200 trades. And that means your capital will need to be able to withstand that.
Oh, that's a fair point as well. Yes. Yeah, it's a fair point as well.
If you trade with $100, how many trades can you take? realistically,
Mhm.
right? What, max 20, 30 on a 0.01? If you trade gold, you will lose it very, very fast, right?
In 10 trades, yeah.
Yeah, in 10 trades. If you start with $1,000, then you have 100 trades that you can actually use your strategy on. And that will be a better gauge of whether you are a profitable trader or not. If you if you have already backtested it and you can actually play it out live.
Yeah, that's actually a good point. Yeah,
Yeah.
you need enough data points, to say that you're profitable over a certain length of time.
Correct.
Right,
And the
yeah.
capital amount should go accordingly to your strategy.
Yes.
Right. And let me just say this here. For most strategies, you should have at least 100 to 200 trades minimally worth of data before you can call it profitable.
Mhm.
Because you need to be able to withstand multiple different months. And every single month is going to be a different market cycle.
Yeah, correct.
Right? Things are going to be ranging, things are going to be trending.
Correct.
And then what's going to happen? You're just going to realize that, oh shit, my strategy is not working in 1 month. And then next month, oh shit, I'm making a shit ton of money.
Yes, correct.
Right?
Yes.
And your capital needs to be able to
withstand these
withstand
fluctuations.
these ups and downs in
Yeah.
your strategy.
Yeah.
And
You know
that's
what?
just the reality of things.
It's so right that you said this because I do remember there was this time, right, Nick, where we actually lost on SMC and we realized, okay, maybe this is a ranging market. We're going to switch it up. We're going to use my expertise when it comes to retail. We're going to swap over to that and let's see how it goes on a higher time frame.
Yeah.
We ended up back with 90% win rate. And then back when the markets really started to break out, we switched back to SMC. So I think having different tools in your belt really helps you to really go and spot. Correct. And imagine if we lost 3 trades in a row and that busted our account. We would have no chance to pivot because we de-risked along the way. We realized that, oh, you know what? Okay, never mind. I lost 3 trades. I lost maybe 1.52% of the account. You know, it's very easy. It's going to be about, based on the RR, right? Maybe 4 or 5 trades to get you back. And you know what? Instantly, bam.
22 trades so fast.
22 trades so far,
22 win streak since the start of May.
Yeah.
But yeah, not to gloat or anything. It's just a fact.
Statistical facts of the matter.
Everything
right,
called live stream.
Which is basically why you guys do need to have at least more knowledge when it comes to this space before you really can say that I want to make it my full-time thing.
Yeah. I think we have talked a lot about the different strategies like SMC, and retail and stuff like that.
Yep.
Now, what do you think about this statement? Mastering technical analysis is the only thing standing between you and your first 6-figure withdrawal.
Yeah, I would say so. I definitely agree with that.
I'm 100% on that.
Okay. I'm glad we agree on something at least. Yeah. I mean, when I first met you, we were both technical analysis traders, no fundamental analysis at all, right? And when it comes to really Forex basics, if you don't understand the red folder news on Forex Factory, don't understand the high impact news, then you just don't trade it. You just avoid it.
Yeah, avoid
right?
it.
And I never felt that fundamental analysis was that important when it comes to the market. My main focus for fundamental analysis was I'm going to wait for it to be over and then see what the TA actually tells me, right? And then I can go back and if I want to read more, I can go ahead and read more. But other than that, it was completely of no concern to me.
Yeah, personally for me, when I started my journey, right, all I did was I went to forexfactory.com and most of the news come out during New York session anyways. And I just actively traded London.
Yeah.
That's what I did. And I managed to be profitable, avoided all the red folder news, right? Things like GBP, CPI, stuff like that, FOMC, just completely say, you know what, screw it. I'm not trading it. Jolts, unemployment claims. You know what, let's just not deal with the noise, deal with the volatility, deal with me losing my account over a trade that I can't control.
Yes.
Right? And just stick to my trading plan and trade. And of course, some people may think, oh, but look, Nick, NFP, CPI, these things can help me flip my account. But can you do it consistently every single news?
I think that is the problem, right? It's not because that reading fundamental news can help you flip your account or get you a gain in this space. I would say, can you do it consistently is the problem. You've seen news come out that is good for the USD. Okay, XAU was supposed to go ahead, and dump, but instead it just pumps up by 100, 200 pips before finally reversing. So if you took a trade at that point in time, then you're screwed, you die.
Yeah.
So there's no point of, really trying to read the fundamental news. If you want me to read fundamental news for you, right, I can just tell you, just buy gold, hold it for 25 years. You're probably going to be up. Right? DCA into the S&P 500. If you really want to look at fundamentals, then you need to have long backtested data and you're willing to go ahead and invest in a index or an ETF or an asset class or commodity instead of trying to trade it. Because when it comes to trading, we're in and out within a day or two.
Correct. It's very, very fast.
It's very, very short term, and because it's short term, fundamentals really play such a small role. It's something that you would rather avoid rather than try to trade with. So
Correct.
avoid that. Look at the price action, and the price action will tell you basically everything that's happening right now, and you make money right now instead of waiting for news that you can't even control. Yeah.
So now with that topic being mentioned, right, on like people losing their money on
Yeah.
news and stuff like that. What is your personal biggest loss in Forex?
I would say this wasn't down to my lack of strategy, wasn't down to my lack of capital, wasn't down to my lack of risk management or knowledge on the topic. This actually came pretty late into the game, right? Many people know that I lost money, about $50,000 when I invested in a friend's business. But if you're talking about in the Forex space itself, there was actually this broker that I was in, and it actually rug pulled me. And that's when I lost a lot of money. I lost about 109,000 USD in one single day. Yeah.
Man, that's
Yeah, and I was with them for quite a while actually. I actually had an account manager that was constantly texting me and telling me, when I should go here and deposit, telling me good job on my account and everything. Yeah, it felt really good. There was someone really constantly update me. I expected that this would go on for a long time, but I didn't know that, one day they were just gonna rug pull me. And withdrawing from the accounts, I've been doing it for months and months already. Yeah, I've done $50,000 withdrawals before, $60,000 withdrawals before. So
back then, yeah.
back then, yeah. So I completely had full trust when it comes to this. And that's why nowadays, the brokers that we choose to work with and we actually decide to put our money in is completely regulated. I need to make sure that we know the upper management. We need to have talked to at least the regional heads, the bosses, the CEOs before. We need to have been in the same room. He need to look me in the eyes and tell me that he's not going to rug pull my money,
yeah. Gotta make sure, right?
At this point, because you have so much money in brokers, I think we do need to be extra careful. But just because you have a small amount of capital doesn't mean you can be, loosey-goosey with your choice of a broker. I know many brokers that members are actually telling us they're using, and we know that they're B-book brokers. So for those who are not sure what B-book brokers actually are, is because these brokers are actually going against your trade. They're hoping that you're going to lose. They're going to introduce major things like slippage, missed orders, and these kinds of things will definitely affect your RR and cause you to lose money in the Forex market.
Correct.
And when you lose, they're the ones that are actually taking your money.
Yeah.
If going back to point number 1 or 2, where you ask whether it was tough trading or if someone is out there to get you, if you're using a B-book broker, then you know what? I gotta tell you in your face that someone is out to get you, and it's actually the broker that you put your money with and you trust.
Yeah, and that is a very shitty feeling to know. Then, if you just start to realize after listening to this podcast, then
go ahead and check.
Do your due diligence.
Go ahead, check a broker. Is it B-book?
Correct.
Okay, yeah, go and search it out. If it is, then congratulations to you. We spotted something today. You can move your money somewhere else.
Trading is the hardest way to make easy money.
Trading is the hardest way to make easy money. I think that's a really good quote. Yeah, which really goes back and really ties everything together as what I said just now, which is really tend to underestimate the amount of work it takes to actually have a profitable strategy, and then once again underestimate the amount of work it takes to actually accumulate capital sizable enough to, number 1, have consistent withdrawals, number 2, have consistent risk gain, right? And number 3, not bust your account on a singular news. And we're not even talking about the psychology aspect of this, okay? There's a whole different beast. Me and Nick don't have to talk about it anymore because our psychology is basically on lock. But I can hand someone $1 million. I can hand someone my strategy. And you know what? Chances are they're still going to bust the account. Correct, Nick?
Yeah,
So it's
correct.
all about handling the car. So, yeah, handling the trade, just like handling a car,
Do you have a personal story of someone, that has, a lot of money and, they lost it? And they lost it via, trying to trade their way into riches, thinking that it was easy.
I did actually know this guy who actually turned a few $100s into a few hundreds of thousands of dollars. Yeah. He actually did it during crypto. It was on a crypto bull run. I remember this guy used to brag to me all the time. He said, why do you trade? Why not just put this amount of money into Bitcoin longs and go on a 100x leverage and then just trade along the way up? Yeah, he turned it from $500 into $500,000.
Damn.
And the dangerous thing about this is, if you feel that money is so easy to earn, you're going to think, oh, well, I turned 500 to 500,000. How much can I
if?
turn 500,000 into? Using the
Right.
same strategy. But sadly for him, this bull run didn't continue. He caught it all the way up to $69,000. And he continued to long, even though it was dumping all the way down. And you know what? He lost everything.
Opium.
It went to zero. Yeah. When you have this egotistical, yeah.
Yeah,
You have
I
this
get
ego,
what
you think that,
mean.
oh, I'm the best trader in the world. Like,
Yeah.
screw working a job.
No one else can make this money that I did in a super short
Short
span of time.
yeah.
Right? Like, I have a skill for life, I'm gonna keep doing
And then
it.
it gets to you.
Yes.
You're
it gets to
trained
you.
on over risking your account.
Correct.
And if you're trained on over risking your account, then it's going to be a very hard habit to kick because your initial pot of gold was because you were
You
over risking.
over-risk. Correct.
So it's not something that you can easily kick. I know someone else, he had 7.5 million USD. Right? Same thing as trading crypto. Right? When it was going up, he was shorting. When it was going down, he was longing. So he made the wrong decision so many times and he just kept layering his positions. Most recently, I know that he lost his entire fortune and he lost another $1.5 million.
My God.
Yeah.
It's a classic thing of, sell high, buy low.
Yes,
you know?
correct. when you FOMO into
Yeah, when you
trades,
FOMO to
when you don't want to
trades, yeah.
lose, right? When your ego is too high, thinking you're the best, because once again, you turn about $10,000, $20,000 into 7.5 million. You're gonna have this kind of ego, and that's why when I look at these people, I think, congratulations. If you want to gloat, I would say congratulations. But because their trading knowledge was built on such a weak foundation, man, I don't gotta worry, bro. One day it's just gonna go, it's gonna go kapoof, and
Yeah.
I'll be here.
Yeah,
If
personally, I feel right for the idea of trading is the hardest way to make easy money, right? You have to take a look at the process of getting there, of getting really, really profitable in trading, for you to be able to make that easy money. I think to us it's very easy.
to us,
Honestly,
it's kind of like
it's really, really easy.
brain dead to this point in
It's
time.
brain
Yeah.
dead because we have all the systems in place in our head that it's on autoplay.
Yeah,
The
correct.
moment we see the chart, we know exactly
Yeah.
what happens.
Correct.
Oh, that's an order block, that's a fair value gap, that's a market structure shift, right? All these things keeps going, and you throw me any chart, Bitcoin, gold, silver, palladium, or
Whatever have you, right?
market,
Yes.
wheat, oil, I can read the charts and tell you exactly what's gonna happen. Right?
Yeah.
That's just because I got years of experience. But if you try to go in and jump in, like back to the first point, thinking you can just buy and sell, right? Then I think you're better off going to a casino and play the slot machine.
Yeah.
Honestly speaking,
Yeah.
right? Do you need to be smart in order to make money in Forex?
I mean, look at us. I mean,
We are both dropouts.
we're both dropouts, right, of university. Yeah, and I wouldn't say we're the best students as well, right? We're in good schools,
Yeah,
but
not-
shit grades.
yeah,
We're in
fair
good
enough.
schools and
Shit
shit
grades.
grades.
Pretty
Yeah.
shit grades.
I think it's because of our rebellious nature, and not really wanting to follow a certain path. But yeah, I don't think you actually do need to be smart, to make money Forex. Like, to really boil it down, it's just controlling your emotions and looking at the chart. It's going to tell you buy or sell, and you just listen to the chart. So really, it's just about lowering down your ego and following what the chart of action says. I think the problem with being too smart when it comes to trading Forex is that you're going to have an opinion on everything. You're going to think you're smarter than the market. You're going to have an ego and think that, okay, because I'm a doctor, because I'm a lawyer, I'm actually going to, go against the trend. I know exactly when it's going to reverse because I've done all my quote-unquote market research. And then at the end of the day, when it goes wrong, the market proves you wrong, it hurts their ego to such an amount that they tend to make very emotional decisions. Revenge trading.
Correct.
They're FOMOing. Greeding into trades, over risking because they think that they're smarter than everyone else. Yeah, the worst traders I know are actually doctors and lawyers. Personally, I'm not saying for all doctors and lawyers out there, okay? Like, don't cut me open or whatever, but don't sue me, yeah. But the best traders I know
Are the stupid people. No, it's true.
I wouldn't say it like that, but yes.
We are stupid.
Okay.
And yet we make
Speak for yourself.
hundreds of
Speak for yourself, Nick.
thousands of dollars every single month. It's true.
Okay, I would say I'm not smart. I wouldn't say I'm dumb. But like for everyone else, I say if you want to make money doing this, right?
Yeah.
You just need to have an IQ above the room temperature. And I honestly think that's good enough. You just need to press buy or sell and listen to the chart. You don't need to have an ego, and please don't have an ego when it comes to trading. I think that's the superpower of trading and being dumb, right?
Yeah.
Because you will tend to want to listen to someone else.
Correct.
If you're dumb, right? So you're not going to have an opinion. You're not going to want to challenge authority. You're just going to sit down and listen to what, the experts are telling you. In this case, the expert that we listen to is the chart.
Yeah,
We look
correct.
at price action. We look at what FEGs, are being formed, what order blocks are being formed, where liquidity is forming, and where can we sweep that, right? Our Asian sweep strategy has been so successful
Yes.
just because we listen to the market.
Correct.
I'm not trying to think we're smarter, trying to get the perfect entries. We just listen. The market tells me to buy, I'm going to buy. The market tells me to sell, I'm going to sell. Yeah, so it's as easy as that.
Yeah, and that's why I do say this on my stream all the time, right? You don't want to predict the market. I think a lot of people that think that they're smart, they act
Yes.
smart, they try to predict the market. Oh,
Yes.
go buy, go sell.
Yes.
Oh, Nick, you're wrong. Go sell.
Yes.
That kind of thing.
Yeah.
But the truth of the fact is, the reason why we are profitable is because we react to what the market gives us.
Yeah.
It tells us what to do,
Yeah.
right?
Yeah.
Instead of, oh no, I'm gonna think that you were gonna do this, and
I'm going to
it
do
does-
it. Yeah. Correct.
So you all you need to do is very simple. Be patient. A lot of people like that, especially people that act smart.
Yes. So high EQ, low EQ, it really goes back down to, that old adage. You can't be book
You can't be
smart.
both.
You can't be book smart, right? You need to be a little bit street smart when it comes to trading FX. Yeah.
Do you think that we can actually make money in an economic downturn?
We can make money in economic downturn.
Yes.
I would say, yeah, definitely, right?
Yeah.
If you look at how we make money doing FX, it is not going to be the small fries like me and you.
Yeah.
Right, that are going to be moving markets. In economic downturn, I would say it's going to be even more volatile, correct? Look at the Japanese yen. That's a very,
it's been
a very
tanking, man.
good example, right? If, let's say, the Japanese economy is doing badly, the Japanese yen is going to be dumping. And we just need to all look at all the yen pairs with the quote currency, and we just need to go again long. And this is one very special case where we can actually look at the fundamentals, actually trade using that.
Correct.
Yeah.
So the fundamentals are basically used to help you boost your win rate for whatever strategy that you're using already.
It would be ridiculous to anyone to look at the Japanese economy, think that, oh, you know what, it's going into the shitter.
Yeah.
I'm gonna long the yen. No one's gonna do that.
Correct.
Right?
I think just historically, when you have economic downturn or black swan events that happen, right? People do lose money. Like, I need to acknowledge this fact. People do lose money because they don't know how to risk manage during times of uncertainties like economic downturns, right? And this is why we always preach about SL to break even. Don't care whether the trade is running very nice or like it's running 100 pips, 200 pips. We SL to break even. Sometimes you even trail our partials, or trail our stop loss to profits, right? Because we never know when a black swan event could happen, or when a news event happens, or a president dies.
Yes.
Right? We never know this sort of thing, and it could happen at any point in time.
But putting it more into the context of economic downturn, I think the members actually want to go ahead and know, right? If in their country, let's say there's an economic downturn, is it possible to make money trading, so on and so forth? I think that's more of the question. And I think going back to that, the beauty about FX is that whether the economy goes up or down, you can make money everywhere. You can long, you can short, you go sideways, you can just trade the range. You don't have to worry about any of these economic conditions. Going back to a YouTube video that I actually did with you, right, was one main reason why I just couldn't get a normal job 9 to 5 was because my dad was retrenched during an economic downturn, right? He was actually fired during this time. And that put me and my family through a lot of financial stress. And why I chose trading was exactly because of this reason. No one's going to fire me from this job. Whether the economy is good or bad, I can just keep longing and shorting the market. No one's going to fire me. I think that's the beauty of it.
No one's gonna take your trading knowledge away.
No one's going to take it away.
It's just all on you.
Yeah.
Whether you decide to continue or not.
Correct.
Right. So you have 100%.
Yeah,
control.
it's recession proof.
Yes,
I would say it's only one of the very few
skills,
skill sets in economies or industries that are completely recession proof. Yeah, unless you tell me you sell water, then congratulations.
Yes, congratulations, you are rich. Yeah. All right. Do you need a high RR to be profitable?
Okay, very controversial. And this is something that I'm going to fight everyone on, okay? For me and Nick, we actually have an extraordinarily, absurdly high win rate. Okay, this month we're on 88% so far.
Yeah.
tipping over to 90.
Tipping over.
Yes, but we do actually have a less than 1 RR. We actually have an RR of 0.7 because we are very defensive when it comes to our trading. Yes. So what that means is we normally would take partials quite aggressively, 20%, 25%, and maybe 10, 20, 30 pips.
Yes.
And then we would SL to BE to protect our trade and let the rest run into, higher profits or full CP. If not, it comes down, tap us out at BE. We play very defensively. We take an SL, we can risk manage sometimes, but other times it would hit a full SL. So that would shift the RR into something less than 1. And I think this is going to irk a lot of people. And we know that in the YouTube chats when they live stream, they do ask, oh, Nick, oh, Leonard, what is your RR?
Yeah.
They're expecting something like 1 to 5, 1 to 12, 1 to 20 with a 90% win rate. Yeah, I mean, you name me someone with that.
Yeah.
Number one, we're probably running on hedge fund.
Yeah, correct.
But I would say that conventional knowledge, okay, is going to be telling you you need maybe a 1:2 RR and you only need, let's say, a 30% win rate in order to be profitable, break even. Correct, Nick?
35%.
35% in order to break even and be profitable.
Correct.
Yes, I think that skews a lot of people's mentality.
Yeah.
What I'm trying to say is you're basically pussies because it's a coping mechanism. Win rate is something that they can internalize and they can physically imagine, right? Win rate is just how many times I win versus how many total trades I'd actually go ahead and take. RR is a bit more magical and mystical. Oh, what is this 1:2 RR? You mean if I win one, like I bet $1, I can win 2? It's right?
Yeah,
but
correct.
you don't understand that in order to get the 1:2 RR, there are going to be times the trade's going to hit your break even, then go back up, hit your break even, then go back up. What if it reverses and hits your stop loss? You never know. What if there's going to be news coming out? People don't play defensively, and I think people just like to throw that statistic out because it makes people feel good. You only need to win 35% of the time in order to be profitable. And then they use the coin flip analogy. They said, oh, you know what? Statistically, trading is 50-50. What? You flip a coin, it's going to be head or tails. You buy or sell. Yeah. And then they just seem to skip over the fact that 1:2 RR is actually quite tough to go ahead and get.
Correct. They're just looking at the factors that, which one is easier to solve.
Yes.
And then
cherry pick, right?
Yeah, cherry pick.
They think, oh, you only win 35% of the time, make someone feel good.
Yeah, it's like, okay lah, that means I don't have to focus too much on my win rate.
Too much, yes, correct.
I can just keep trading it. I know I'll take some losses, but
it's fine.
I just need to wait for that one winning trade to make all the losses, and then you'll be back and break even.
Correct.
But honestly, that will do a lot of harm onto your psychology in the long run.
I'll say, like, if you trade like that, it's basically copium because you know you're not good enough, and therefore you can't say that, okay, I want to win positively. I want to win more than I lose. People can't deal with that fact. So for us to sit here and say that, you know what, I win 88 and 90% of the time, but only have a 0.7 R because I play defensively, I know that the very next trade most likely is going to be a win. To have this kind of confidence is very good for my psychology. And you know what? That's just our own trading style.
Yeah.
I mean, if people want to go here and say that, oh, no, you should have a lower win rate and work on your RR, then I would say, okay, show me your withdrawals then. Show me your millions of dollars in your accounts. If you can't, then I guess listen to me.
Yeah, exactly.
Yeah, I mean, one good piece of advice is that we see inside the chats, the YouTube chats, inside our YouTube video comments, a lot of people like to comment a lot of things, telling other members what to do, what to buy, what to sell, when to buy, when to sell. And at the end of the day, I think a very good piece of advice is only listen to people who are at a stage that are higher than you. I would objectively not listen to relationship advice to someone in a failed marriage. I'm so sorry. I'll not listen to financial advice from someone with less money than me.
Okay.
I'll not listen to business advice from someone who has never run a successful business. Yeah. Which is why, like, people tend to not be picky enough to the people that they listen to. They take all the information, they shove it in their brain, and then they think everything is correct. That's why people are suffering from TikTok brain.
Yeah.
Everyone has this
attention
span deficit. Everyone thinks that trading is easy money because it's all that's being put on social media. They see the Lambos, they see the boats, they see the cars, they see the houses. Shiny object syndrome. And then they think that, oh, because this guy is done it, he's young, then it must mean that he was easy. And then you don't go through the proper withdrawal process of asking them, show me your withdrawals, show me your trading history, show me your win rate, show me your R, show me that members actually win.
Yeah. Correct. I think we do all that. So see wherever the fuck you want, Yeah. Now, do you need to trade every day to be successful in trading?
Do you need to trade every day in order to be successful trading? I would say me and Nick already tend to hit the higher side of number of trades taken during an actual month. We take only about one trade a day for trading days itself. On average, it's about 1.2, 1.3 trades a day.
But it's on the high side.
It is actually already on the high side, right?
Right.
And that's why, like I said, our win rate is going to be a little bit lower at around 0.7. But we do have a lot of backtested data to actually, say very confidently that my win rate is 88, 90%. But if you look at someone like Thomas, who is on the team as well, he actually only takes maybe one trade every 2 weeks, maybe even one trade
Yeah.
1 week.
Correct.
Yeah. So overtrading is definitely going to be leading to losses, more losses than gains. Yeah. I think the more capital that people actually go ahead and have, the more selective you would actually be in terms of your trades. Because you know that every time you take a trade, I'm not wishing for this to be the one silver bullet to flip my account. I know that this is potentially going to be a loss. And if I lose, I must be okay with that amount. Any increase in my capital, that's going to be a plus to me. I think having that sort of mentality is going to be very good for you. And if you look at it in terms of every time I take a bet, I can lose, then you're going to be less inclined to making risky bets and only play the hands in which you're very confident to go ahead and win.
Correct. The way I like to put it is, every single day I only got one bullet to shoot, right? And I got to make sure it's the best A+ setup I've seen, right? For the day itself at least. And if it plays out, gives me my confirmation, I pull the trigger. If not, I will gladly sit on my hands.
Yeah.
And a lot of people have an issue with that. They have itchy fingers. And this itchy fingers thing is something that it's very hard to get rid of, to be honest. Because
Yes.
when I first started out, man, I was taking 6 to 12 trades a day, risking, 3%. It's like up and down and up and down and up and down, It never stops. But the way I got out of it was by just like walking away from the chart.
Yeah.
That's the best way to curb the addiction of pressing buy. It's really an addiction.
it's an
And I
addiction.
have to say it, right? Because
It's a gambling addiction.
it is a gambling addiction,
right? It's a slot machine, basically.
Yeah, it's like you see your P&L go up and down. Oh, wow, I'm rich. And then suddenly, oh no, shit, I'm feeling poor, Yeah, so it's an addiction, and you guys need to really, really get your emotions out of it. You need an ironclad mindset.
That's the toughest part when it comes to trading, right? Like we say, our strategy is basically free for anyone to go ahead and copy. You can go ahead and copy. It's really not that tough. Correct. Yeah. Go top-down analysis. You look at FEGs, OBs, wait for the confirmation, just pull the trigger. But most people can't do that. They want to take a trade now, right? They don't want to wait for the confirmation candle in order to take a buy. They want the most perfect entry, so they take a risky buy, and at the end of the day, it reverses or it wicks them out, and then they're so confused. They don't understand what's going on.
Correct.
And yeah, we've seen that play out live in front of the charts with our members already.
Yeah.
So seeing this in real time is actually very interesting, right, Nick? Because it really separates the good traders from the bad. And the more we see them come on board the live streams, you can see them actually typing out their lessons they learned. Oh, last week I lost because I was impatient. This week I'm gonna sit on my hands.
Yeah.
And when that trade eventually happened, they got everything back and more. So yeah.
Yeah. So I think on that fact as well, there's a reason why on live stream, right? Sometimes I start the live stream at 3 p.m. Let's say, for example, during the London session. And when I stream, right, and I look at the charts, a lot of people are like, do I buy or do I sell? I just keep saying patience. Sometimes I wait an hour plus, close to even 2 hours. I had to extend the stream sometimes because, only then the market gave me an entry. I'm not going to go chase after an entry. What I have to do is wait for the entry to come to me. And that's the best way to get an A+ setup.
Yeah.
Trading is gambling for 90% of the population. Okay.
I think it leads in very well to the previous point we actually had.
Yeah.
Yeah, I mean, it is essentially gambling is
Some
trading
people
is
say
really
it's
gambling.
like an educated guess, like educated gambling. Like it makes you feel smart when you trade.
Okay, well, to be fair, all trading should actually be somewhat educated, correct?
Yeah.
Yeah, unless you're talking about slot machines, then that's completely uneducated. But if
Yeah.
you look at something like blackjack, look at something like poker, even if you look at the roulette table, there are strategies that you can actually go ahead and use and control your risk in those games. So yeah, if you think about trading like that, then I guess you could say that it's somewhat like gambling. You're taking an educated guess. But the problem with that is there's so many other things you can do in trading to mitigate that risk so that you become the house instead of becoming, the little fish in the sea that gets wiped out by the casino. I think that's something that most people seem to forget,
Mm.
right? That if you look at gambling, if you look at a casino, the odds are always going to be stacked against your favor. Whether you are trading with a strategy or not, like playing poker or playing blackjack, there's always going to be odds against your favor. But when you look at FX, there's so many things that you can avoid. Let's say you want to avoid rate for the news. Okay, you want to increase the win rate. You look on higher time frames. Okay, you want to increase the win rate. Look at higher time frames plus candlestick patterns plus order blocks plus FEGs. Okay, like probably you're gonna win.
Correct.
And we can say that with true confidence because no gambler has an 88% win rate.
Yeah.
So no one has an 88% win rate. And at this point, right, I can say for sure that it is basically, we run it like a business. Our trading accounts are like a business where we are expected to lose, but we are expected to lose in a certain range within 10 to 20%. That is our expected range of losses.
Yeah.
And if we look at it like a business, then every profit that we get is actually just pure revenue, and the losses are going to be the cost. The rest of it is net profit. It's the same thing for any business. It's always going to be revenue, cost, profit. And if you look at it like that, if you think about trading as a business instead of educated gambling, which is why, going back to the point of, you only need a 35% win rate if you have 1-2 RR. Yeah, of course, then you're going to be gambling. You're going to be hoping for the next one to 1-2 RR. You try to stack the 1 or 2 RRs, right?
Correct.
Yeah, but if you know that you have a win rate of 90%, if you wait for that entry, and you only have a 0.7 RR, you're going to be patient with your trade. You know that if you lose, you're going to lose more than you win. But
Correct.
because if you're patient, money is almost essentially going to go into your pocket. You have a 90% chance of putting it in your pocket if you wait for that one little chance.
Correct.
Then yeah, you're going to treat it way differently.
Correct.
Yeah.
To add on, there's this saying that, if you have no knowledge about trading, you buy or sell 50-50. Right? It's a coin flip. I mean, apart from the fact that, the market is random.
Yes.
Right? So the first thing people really should take a look at is technical analysis, right? You want to master some sort of technical analysis, and I don't care what it is. Could be RSI, MACD, market structure, support and resistance, right? Things like this will already give you an itch to tilt the
scales in the favor, yes.
Yeah, from maybe 45 to 55.
Yeah.
Right?
Yeah.
You have 55% win rate.
And even if you have a 1-1 RR,
yeah,
you're still going to be profitable at the end of the one. And you know what? People just don't understand that.
Yeah, people just don't understand that. Yeah,
it's so frustrating, honestly. It's so frustrating.
So many analogies, right, for it. Should I borrow money to start trading?
Should you borrow money to start trading? I mean,
that's a question that I think a lot of people have been asking us. Yeah. And what are your personal thoughts on that?
Okay, for me, myself, right? I think trading is a very personal thing. You don't want anyone to be rushing you for results. You don't want anyone to be rushing you about where the money is. Okay, if you lose the money, do you have a way to effectively, give it back to the people that you borrowed it from? All of these things are going to wreck your psychology. It's not just talking about the morality of borrowing money and putting it into some risky asset. Okay, because trading, please understand, even though, yes, we do win a lot and we have gained a lot of money from this, know that inherently it is going to be risky in nature. So, I would highly suggest against borrowing funds to do something risky unless they gave you the money and said, have fun. Unless you have a really nice mom or dad and said, congratulations, you turned 18, here's $1,000. Go ahead and blow it in your first account. Yeah.
Yeah, I mean, honestly speaking, I have this experience before.
Oh, you do?
I wouldn't say I borrowed, but my parents believed in my ability in trading when I was 1.5 years in. And they gave me, I would say gave lah. I mean, I would say that they gave.
They gave.
They gave.
They
but
gave.
I feel bad, so I need to pay back, right?
Oh, okay.
So, yes. So, they gave me $50,000 US dollars to trade.
Oh.
Yeah, US dollars to trade. Because I showed them my prop firm payouts, right?
Yeah.
Look, man, look, mom, look, dad. I made money. I put 20K out of this thing. I just put $2,000 inside this thing. I passed the challenge, and I got 20K out of it. Why not? I will treat your money.
Jesus. Okay.
And okay lah. To be fair, I didn't make money.
Uh-huh.
I made $25,000 for them.
Hey, 25. Okay.
25.
Yeah.
And then over the next 3 weeks, that $75,000 went to zero.
Oh, you went to zero. Oh, you busted your account.
Yes.
So is that the biggest loss personally for you?
That is the biggest loss. The biggest loss is 50,000 because it is like
On
was
capital,
a gain,
yes,
on
yes.
capital. But if you talk about from the highest point to the lowest point, it's
75,000.
75,000.
Jesus Christ.
Yes. So no matter what you do, never ever borrow money or try to trade for someone
Yeah.
because it is not your financial loss, and you will feel responsible for
Yes.
whoever that is trading. I think it just doesn't sit well.
Yeah, I would say it's even worse if, it's your family members.
It's my parents.
And they ask you to pay it back. Let's say
Yeah.
they do ask you to pay it back. I think your parents are very nice in that sense, where,
No,
where it's your personal
I had to pay
responsibility.
it back. Yeah.
Yeah.
Because I feel bad. I felt very bad.
Mm-hmm.
Like, they didn't ask me to pay it back, but I had to pay it back. I mean, given that where I'm at right now, right?
Yes.
Like, definitely had to pay it back. And regardless whether you take it as I personally took it as a very, very painful lesson,
Uh-huh.
emotionally. The reason why I busted it was not because of bad trading, right? It was because of over trading on
Yes.
emotions.
Yes. Because it's not your money.
It's not my money.
You feel like it's a demo account, right?
Exactly.
Yeah.
It feels like a demo. You're
Yeah,
right.
it feels like a demo account.
demo account. And
Yeah.
every single trade, like, oh, plus 2K, plus 5K. I'm like, oh, okay, cool.
Yeah.
Cool money.
Yeah.
Minus 2K, minus 3K. Yeah, I can earn it back.
Yeah.
You know, the kind of thing?
Yeah.
It's not your hard-earned money.
Yes.
So this is exactly why I would say never ever borrow money to trade.
Mm-hmm.
If you cannot afford it, go work a job, save that money, and then trade that money, right? Do not ever borrow because you are leveraging.
You're essentially leveraging but in this case, you're over leveraging your life.
Yeah, you're
Yeah.
over leveraging your life.
Yeah.
Exactly. Now, on to the next point. Is trading on leverage risky?
Is trading on leverage risky?
I think it's a very interesting question because inherently in
You
most
need leverage, right?
in most platforms that you trade, be it crypto, forex, stocks, there are some form of leverage like
Yes.
CFDs, right?
Mhm.
I think is the idea that we are given the power of leverage
Mhm.
for the sole purpose of over risking.
I would say a lot of people actually talk about broker leverage. And
Yes.
I think a lot of people have this misconception that if you change your broker leverage, this is going to change your trade size. And in fact, the amount that you're going to risk. It's actually not the case. Some people ask, oh, I'm only trading a 1 to 100 leverage. Is it the same as 1 to 400 leverage? Same as 1 to 500 leverage? Same as 1 to 1000 leverage? Yeah, it's completely the same. The only difference is the maximum lot size you're actually allowed to open
use.
at any one point in time.
Correct.
Right? So for me, trading on leverage, is it risky? No, because you're never going to use the full leverage anyway. And if you are, something has definitely gone very, very wrong.
Correct. Risk
Right?
management is down the drain.
Yeah, that's like
Yeah.
saying like, okay, I put you in a car. Is it inherently risky that I can step on the accelerator the entire way? No, right? But if you do, yeah, right? Imagine you get in a car, right? You're in the
Yeah.
parking lot. You turn on the car. You press the accelerator. And you try to drift out the parking lot. Yeah, obviously it's going to be inherently risky. You're probably going to kill someone, right? Same thing when it comes to trading an account. Imagine the first trade you go in. Okay, I have $1,000 account. First trade, boom, 10 lots. Bust my account. Ah, shit, trading's risky. Like the fuck? Like,
Yeah, I think just people are not
Yeah.
educated on the fact that, risk management is a
Yes.
thing. They just see money.
yeah, so like the higher lot size they use, the higher amount of money that they're able to gain, right?
Yes.
But most people don't understand
You
that
be smart,
it
hell.
also equals to
More
the
risk.
more amount of money that you can go ahead and lose. And
Mm.
I'm very irked by this fact because a lot of different gurus actually tend to use leverage as a selling point. I know this guy who was actually selling Forex, right? He was talking about, oh, you have a 1 to 1000 leverage. If you trade, let's say you max out your lot sizing, right? You can flip your account from $200 into $2,000 using just this one little trade, just by catching this order block or this support or this resistance. And he said, oh, if you lose, you lose. But what he seemed to forget is that based on that lot sizing, okay, and based on that risk management, you're going to bust in 10 bips.
Yeah.
So I think you have to ask yourself, is it worthwhile, to bust all your money in one shot and 10x your account? Or is it not? It's probably not. It's not
probably
worthwhile,
not.
right? Look, guys, the spread is 3-4 pips already. So you're already halfway into drawdown. Then the moment you open your trade, you're 50% loss.
And margin call.
Yeah, and margin call. And
Oh,
it
no.
starts closing a position. Most people seem to forget these things.
Yeah.
So trading on leverage, I would say, is risky if you don't know what you're doing and you have absolutely zero control of your emotions and you must go full leverage every single time.
Yeah.
If you're someone like that, then please go ahead and lower your leverage yourself. Yeah, that's something you can control. It's in your hands, right? Do it in your broker.
Let's talk about the idea of becoming a full-time trader. Do you need to become a full-time trader? Means you don't have any other jobs, nothing else on the side, right? To become successful.
Oh, definitely not. Yeah, you must understand, right? Like trading really is quite simple. Like as we mentioned, me and Nick are only full-time traders because this is the path that we chose, and we really wanted to go and refine our strategy until we can have these kinds of statistics. Okay, so yeah, after being full-time for maybe 5-6 years at this point with Nick, that's how we achieve our 88% win rate, 0.7 RR, and we can do withdrawals like whatever you see right over here. But if you're talking about a normal dude, okay, that just wants to supplement his income with FX trading, then yeah, you don't need to be a full-time trader, but you do need to manage the expectation in a sense, right? You can't expect to do the same withdrawals as me while working in 9 to 5, right? Because I'm giving 100% into this every single damn day, 110% in fact. Even if we're sick, we still work.
Correct.
Right? And if you're planning to put your 30% into it, 20% into it, then expect
those same results.
a proportional amount.
Yeah.
Yeah, because we look at the chart all the time, we're ready for an entry. Okay, so we can get about 7 to 8% per month. But I think realistically, if you're doing it part-time, you might miss some trades here and there, miss some setups, expect to maybe do 3 to 4%. I'm trading on millions of dollars. Let's say you trade on a 20K account. Then yeah, you have to manage that expectation. You're going to do 3% on a 20K account. That's $600. Are you guys okay with that or not? You guys got to ask yourself. If you're okay with that, then yeah, then all the power to you. You just probably paid off your phone bills for your entire family. You probably bought like a two-way ticket to Bangkok every single month.
Yeah.
Yeah, maybe a nice meal, maybe a drink. But yeah, managing expectations is very important. Yeah, and you can slowly scale up from there. You can slowly, extend your time horizon until you come to a point where, let's say you have a lot of capital, you have refined your strategy until you do hit a 5, 6, 7% win rate. And if you decide to quit then, you have a long enough trade history to know what is your historical average. And if your historical average is something that you can live with, it's 5%, 6%, and you have a large enough account size, 100K, 200K, you can do 5, 10K a month, then yeah, if you're okay with that, then by all means, right, go ahead and quit. But if you don't have that, I would highly advise, okay, going against that, quitting your job. Yeah.
I personally feel that you shouldn't quit your job or anything, right? For that matter, I think the question was actually more of like, you need to be a full-time trader. The answer is no. I think we both agree that.
You don't need to be a full-time trader.
Yeah, you can be a part-time trader, right? I mean, I think we can be considered as part-time traders as well. I mean, I don't stream 24 hours, right? I don't stream 9 to 5, right?
True. True.
Yeah.
But it's the only thing that we do.
Yeah,
So
it is the only thing that we do, correct? But apart from that, the most important part is that when you have a job, what you have is security. Okay? And when you trade Forex, you don't have to stress about whether you win or you lose because you are focused on the process of getting good at trading, not good at making money. Okay? So when you focus on the process on being good at trading, naturally, money will come in as you get better and better and better. You go from being a not profitable trader to being somewhat profitable but not consistent. And then you slowly become a consistently profitable trader.
And the money just come in naturally.
Correct. And all this, you can do all this with a job. Okay.
Yeah, you can.
Given that it is true that, yes, maybe the timeline could be extended because you're not spending too much time on trading, but it is still a stress-free way, in my honest opinion, that anyone can pick up trading and make an income out of it. But it's not a replacement of an income, but a supplementary income. Yeah. Okay, Leonard, do you think someone can lose with a profitable strategy? Do you think we can lose with a profitable strategy?
No, 100% say so, right? Like I mentioned just now as well, that if you guys want to be constantly profitable when it comes to trading, you do need two things, right? Consistently profitable strategy and then a lot of capital. But there's a hidden thing within that strategy itself, which is down to your psychological mindset. Yeah. So if you guys are having a bad day, please don't trade. If your girlfriend just broke up with you, please don't trade. If your dog just died, please don't trade. if you're going to have these kind of negative emotions going into the charts, it's definitely going to affect your decision. Because at the end of the day, you must look at it without any emotions. It must be emotionless, right? You must look at it like a robot. As long as it checks criteria 1, 2, 3, 4, and 5, that's when I'm going to enter the trade. If you're emotional, let's say you feel like, oh man, like the world sucks, the world's against me, today I want to earn a lot of money. You might be taking impulsive entries, you might FOMO into trades, you might greed into trades, you might over risk, to cope with your feelings. And in that case, yeah, you can definitely lose with a profitable strategy. We've seen that in ourselves.
Yeah.
Let's say when we were sick, when we were not feeling that well, our win rate definitely tanked. It went down to 75% over the month. We knew that ourselves.
Yeah.
We know members who tell us, you know what, I just got a divorce. I'm so sorry. But they tell us they got a divorce, or their dog died, or their sister is sick. Yeah. I would tell them, don't trade then. Just keep away from the charts, because I don't want you to make dumb decisions, right, that are emotional and end up losing, because you can have the most profitable strategy in the world. But at the end of the day, if you decide, to go full bonkers, you're still going to wreck yourself, right? Yeah, you guys know the safest car in the world, was it Volvo, right? But if the crazy man in the Volvo is still going to drive off the cliff, it's not going to save him. Yeah, so you can still bust on the most profitable strategy.
Yeah. Okay, I mean, this is what I believe. Trading is one of the most mentally tiring
industries to
be in, right? Because of the psychology aspect, right? When you're managing your emotions, when you're looking at the chart's going up and down, the colors of the chart actually, gives you some sort of an emotion already.
Yes.
Right? Yeah. Red color is going down.
Yeah.
Right?
Green is color going up.
Right?
Blue on your MT4 is
blue
good.
is good.
Red on your MT4 is bad. Yeah.
Exactly. So these things are small things that could affect you, even though you have a profitable strategy.
Yeah.
Right? And I think I completely agree with what Leonard says about not trading when you have a bad day. Okay. The most important thing in trading is to preserve your capital. And if anything that is, a third party,
External factor
that could affect your trading, cut it out.
Cut it out, yes.
Just cut it out. Stop. Wait till everything goes back to normal, get into your groove again, and then you start trading again. Yeah. All right, Lennon, I have a question for you. Forex trading is only for men. What are your thoughts?
Oh, I thought that was a statement. I was like a bit concerned.
Yeah.
No, I mean, definitely not. I would say it's very male-centric. It's very male-focused. But I do know a lot of female traders. Yeah, I do know a lot of them.
It's our community,
Yeah, a lot of them are profitable. Honestly, some of them are way more profitable than the men. Because they don't have an ego, I realize. Correct. Yeah. For example, Claude, I remember, she actually took $9,000 out, I think a few months ago, right? In a single, I think about 2 trades.
Yeah.
And it was properly risk managed. She grew her account steadily. She was still working a job. And she just controlled her emotions very, very well. Yeah. And I think that's something that guys, if you're listening to, that's something you can actually learn from the girls, right? Yeah, which is don't have an ego when it comes to trading. A lot of the men are the ones telling us, oh, I need to hit my profit target. I want my $100 per day.
Yeah.
I want my 4-figure day. I want my 5-figure day now. It's impatient. But when it comes to talking to our female members, I realize just a little bit more chill.
Yeah.
They can take their time. They're like, oh, okay, you know what? If I don't understand this, I will go ahead and watch this video. I will text you guys on premium. I will understand more about what the strategy actually entails before I go ahead and jump into the strategy going full margin.
I actually want to explore this a little bit more with you. The idea that, okay, this is going to be a little bit controversial, but look, females are generally more emotional in nature compared to male. Males are more logical.
Yes.
But why is it the case that during trading, males are more
susceptible to losses?
Yeah, mostly susceptible.
Or more emotional?
Yeah, more emotional compared to females. Females are able to manage their emotions pretty well.
Yes.
Why is that the case?
That's a very good point. I mean, for me, myself, I always felt that it was a very guy thing.
Yeah.
It's an ego thing to go out there and must be the one to get the bread, right?
Make the most money.
They're the ones that must make the most money. They're the ones that must be the most profitable. They must show off to everyone else inside the group that they are the best. They want to be on the top of the leaderboard every single day. And because of that competitive nature, that leads them to make risky decisions when it comes to Forex. Goes back down to just now I said, the doctors, the lawyers, these are the guys that are losing the most because they have something to prove. An ego. Right?
Yes.
But when it comes to the women, the girls inside our group, they have nothing to prove. They know that the guys really think that they're not going to earn as much. So they can sit on their hands, they can chill. Let's say they don't win today, they don't take a trade today. Doesn't matter, they take the A plus setup the next day that gets them their full TP, and they take 1 to 2 trades a month.
Yeah, they are really doing this for themselves, not for anyone else.
Yes, but when it comes to guys, right, you got to show off, right? Like who has the biggest withdrawal, who has the nicest watch, who has the nicest car, who wants to win that competition. So this is down to the competitive nature, which Forex is actually not. You don't have to compete with anyone else. And I think that is something that people need to get straight. When it comes to us being raised as children, let's say in a society like Singapore, it's very competitive, right? It's always against someone else, and you can look them in the face. You can look competition in the face. If you're number 1 in class, there is a number 2 that you can go again. Okay, he's number 2, he's trying to catch up to me. If you're number 2, it's like he's number 1, I need to catch up to him. It's just him. In, let's say, track and field, you're running a 400-meter sprint, you're going to be chasing someone down, someone chasing you down. It's all very tangible.
Yes.
But when it comes to Forex, it's not. It's really just you and yourself. Just because someone won $1,000 doesn't mean that he took it from you.
It's you versus yourself.
It's you versus yourself, yes.
Constantly improving to beat your previous self.
Yes, but a lot of comparisons are being made.
Yeah.
Right? And I guess a lot of people like to compare themselves to us as well. And I think they tend to get a little bit competitive and make rash decisions.
Yeah. It's like, how can I get results like you?
Yeah.
They want to get the results fast. But I think my advice here is to really stay in your own lane, right? Progress accordingly to what you're comfortable with.
Yeah. So whether you're a guy or a girl, okay, you guys can learn from this lesson, okay? Like, chuck your ego aside and just go with the flow.
This statement, you can only make short-term gains in trading. What are your thoughts?
For me, trading is a very good way to get from $10,000 all the way up to $1 million when it comes to your net worth. After that, I think the scalability really goes down, right? When it comes to trading Forex, you must understand, I'm never going to be putting multiple 7 figures into a singular broker. Whether how much I trust this broker, how safe it is, how many assurances, how many licenses they can give me, I'm still not going to be putting all my eggs into one basket, correct? And after that, you do need to leverage on higher leverage opportunities at a point of time. So like for us, we've gone from 5 figures to 7 figures in this span of time. But if that was the only way, then I would just keep topping up my account. But I realized that that's just not sustainable. Imagine trading a $10,000 account. Okay, and a few years later, you're trading an 8-figure account, you're trading a $10 million account. The psychology aspect is totally out of whack.
Completely
There's
changed.
different issues like slippage, the market's not being able to fulfill your order because it's so
large.
goddamn big.
Yeah, it's too large.
Yeah. So what are you going to do? You're going to change up your trading strategy? Completely going to flip it, trade like a bank? No, you're not.
Yeah.
Right? What are you going to do? Like form your own order blocks and FEGs? No, you can't do that, right? So if it's just a cap whereby if you're going to be aiming to hit your first 7 figures, I think it's a very good way. It's infinitely scalable up until that point. Or finitely scalable up until that point. And after that, then you can look at other aspects. Things like investing, 7% a year is absolutely fine for me at this point in time.
7% a year is fine. Yeah.
I put in the S&P.
It's
Some money in fixed deposits, 3.5%, 2.75%. I'm completely happy at that. Yeah. So it's all about scaling up your opportunities and taking less and less risk. The bigger your capital actually grows. Yeah. So
I guess I do agree with you, right? Right. Trading can definitely will help you get from $1,000 to $1 million.
Yeah.
But I think to the point where is it sustainable? I do agree that it is. It can be
sustainable, but up until that point.
Correct, up to that point.
Yeah.
And then it becomes like, okay, I have this much money, like maybe 8 figures, right? 8 figures worth of cash. And the proportion of your income that you're earning from trading becomes substantially lesser compared to what you have.
Whatever else is.
Yeah. And that is something that's going to happen because you just don't want to take so much risk.
Yeah.
You got to protect that base, right? Whatever you worked hard for, you slogged your ass off, right? You I don't know, you lost your job or whatever, you went into trading, don't know what your story is, depending, right? You put all your blood, sweat, and tears into it. You have to protect it with your life, right? And you need to de-risk it to different assets. And like what?
But that comes later on, I would say. For most people, $1 million is going to be the end goal.
Correct.
And in that case, I would say, it's definitely not short term. It's going to take you quite a number of years in order to hit that point. So if you guys are asking, can I do this forever? Probably not. But can you do this for the next 7, 8, 9, 10 years, 20 years even? Yeah,
Probably.
for a gut, I'm sure. And I'm sure 10 years, 20 years down the line, me and Nick are still going to be trading.
Yeah.
Yeah. But it's just that the proportion of the income is going to be less and less in terms of Forex, more in terms of other things.
It's more going to be like a hobby kind of thing, trading, because it's fun.
Because I feel like it.
Yeah, I feel like it,
Feel like it. Yeah.
Yeah. I feel good.
So hey guys, Nick and Leonard here. Hope you guys like the podcast and hope you guys learned something new from this. If you guys like what we do, go ahead and subscribe, like, and share this with your friends. And we'll see you guys on the next one.